And there you have it. The markets are officially closed on this Wednesday, March 11th. Welcome, investors and traders, and welcome to those who are joining us on X. I mentioned this last week. If you want a better experience, come on over. You got enough time to join us on YouTube, where you can go into the chat and put in some ticker symbols and questions, and we'll be sure to address those. We're giving out prizes from our swag store for those who put out the first ticker symbol, and I grab that, put a target. If the target hits, then you get something from our swag store. We got Nick as a contender right now. He was looking at SILR last week, and we're pennies away from hitting that one. So Nick, stand by for your swag. And before we get into the charts, let me bring on Nod from our Nod Live news feed. Nod has a lot to put out at the beginning of the show here, and then we're going to dig into the charts and talk more about what's happening in Iran and how that might affect the market. So, Nod, go right ahead. Take it away.
So much going on, AJ. Thank you so much. Tickers are flying in. Thank you so much for being here, everyone. We do appreciate you taking time out to join us, both live and on the recording. It's a pleasure and an honor for the company to be here with you. Listen, AJ, it's been a record-setting week, and I'll dig into that in a minute. But before I do that, today we got CPI showing up, which showed that inflation remained unchanged at 2.4% in February, which was in line with expectations. But the recent escalation in fuel prices following everything that was going on in Iran is not in this data, so let's keep an eye on this. This does put the Fed in a pickle because cutting rates while inflation is going up is not something that traditionally happens or works out well. Bank of America has warned about a bubble-like behavior seen in materials and in commodities. JP Morgan has reined in their lending to private credit firms after they're marking down lots of software loans. You know, we've talked about these software companies and the haircuts they've gotten, and we still think some of them have quite a bit of overvaluation. So, AJ, we'll dig into that. And I'd be remiss if I didn't talk about oil. They had their second largest weekly surge since 1985. This week alone, it was a 35% move. Historically, AJ, after these spikes, oil usually tends to pull back in the short term, but outperforms in the next 3 to 12 months. Stocks at the same time tend to underperform in those months. USO, which is the options vehicle around crude oil, saw 5 times the normal volume, which was more puts than calls, which brings me to this. I've got this chart here, AJ. At Monday's trading lows, the S&P was down more than 5% from its January 28th peak. It was the 32nd 5% pullback since March of 2009. So, AJ, we've been adamant in our community about the return of volatility, the importance of having protective stops in, the importance of having for profit orders in, managing your sizes of your positions, and having the right number of positions. That's a lot. And I know people like to go on offense, but you can't have good offense without some defense. So would you mind going over the major indices, which all your targets hit since last week, by the way, and talk about what I just kind of grazed over as far as an approach to this market?
Yes, all the targets, in fact, did hit from last week's market report. Now, again, if you're a brand new viewer to the channel, we do this live broadcast at the close of the market every Wednesday. But then the following day, on Thursday, I put out the weekly market report that has my price targets attached to that. And I try to get it out between 1 and 2 o'clock in the afternoon Eastern time, so that those folks that are using those targets to help adjust their positions have enough time to do that on Thursday. And then if you don't catch it on Thursday, then obviously the targets are going to carry over into a full trading day on Friday. So you don't want to miss that. You know, Nod, I want to back things up just a little bit.
Yeah.
Talked about JP Morgan,
right,
and then Bloomberg. Now you could pull this from your Nod Live news feed. I didn't get the whole story, but I got a headline that came out from Bloomberg talking about it was Morgan Stanley, I believe, was putting some brakes on some of that private lending. So you have any info on that? Because the way I see it, this is shaping up to what could be another Bear Stearns moment. We'll have to see what Jim Cramer has to say about JP Morgan and some of the other ones out there. I don't want to put Jim on the line there, but we already have a put spread on JP Morgan for our VIPs. We have a horizontal put spread that's right around the $300 strike. So that's working out very well. But what are you hearing about Morgan Stanley? What your news feed telling you there?
Well, AJ, those large institutions, other than some of the services they provide, they make money via lending. And we've heard some color in some of our chats that these banks are pounding on doors looking to lend people money. So they're willing to take some risk. But all of a sudden, with some of these assets that are on their books as far as loans, they're getting a little bit sketchy. So there's a thing that they do, which is called mark to market, which is an honest marking of where your position is truly today. But there's been some bending on that. I think some of these places, which might have, let's say, an ice skating rink in the Cayman Islands, that might be marked to convenience, and where it might not be where they want to have it marked. So if you compound that, AJ, they're concerned that there are a lot of assets on their books where there are loans tied to that are not truly marked, and that they have taken a haircut. They've started with these software companies that we've talked about, which have a lot of weakness, but there are a tremendous amount of other places where they have money lent that they believe are in that gray area and are giving them concern.
Right. Well, that's an area we're not just seeing weakness. We're also seeing weakness in the general markets. You mentioned the targets from last week. Here we have a chart of DIA, which is the Dow Jones Industrial Average ETF. And this little diagonal red line right there was my target from last Thursday. You see that?
Mm-hmm.
And so we absolutely hit that target of 475.78. But look down below, and you'll see the volume bar down there with an increase in volume today on the way down. You see that? So right as of now, I'm leaning more to the downside, and I'm not going to put the downside price target on yet until tomorrow's report. But as of now, we're seeing a lower high from today. See that? And a lower low. So there's your pivot in what could be an ABCD downside target. Here's the A. We had a pivot yesterday. There's your B. Today we have a pivot lower. So there's your C. That generally leads to a lower than B, D. All right, lower than B, D, meaning that we're most likely going to go out and break out below the support level from what we saw there on Monday. And so that's looking bearish. But IWM also hit the downside target, and you can see how perfectly that was. And now, again, another pivot with a lower high, a lower high, lower low, but we don't see a big volume day on IWM. So this one might find a level of support somewhere between where we are here now and the low from Monday. But here's the big news. I want to spend a little time on this. This is the Qs, the QQQ. Right. Now, we hit that downside target perfectly. We bounced after that, obviously, and then we're starting to see another pivot. But what I want to bring everyone's attention to is this moving average chart. And this is the big deal. Today, hard to see. I can't even magnify that. There we go. You see that green line is the 50 period moving average.
Right.
As of today, that moving average is now crossed below the 100 period moving average. So that's going to put pressure on the tech sector in a big way, because a lot of the algorithms will start firing off sell orders to protect the portfolios when that actually happens. So there's the trigger. And down below, you see this gray line here. That's the 200 period moving average. So I believe that we're going to go right back down to test that target that I had from last week at 596 and change. But I think there's also the possibility, if this war in Iran continues, I think we're going to start dropping below the 200 period moving average. And of course, that would be a big event for investors, not so much for traders, because traders could reverse the position,
right,
and go short on a dime. But investors are going to get caught if that were to happen. I think we're on our way to seeing that happen. Looking at the monthly chart on the Qs, we have a pivot. And I talked about this one with our members a couple of weeks ago, where I believe that this whole section that we saw in 2021 and into 2022, I think that whole down leg is repeating. So we could wind up with the Qs down here close to 500 if we repeat this performance from back in 2021. So we are already in a top. We have the top in. We got lower highs, lower lows. The momentum is continuing. Now, this is a monthly chart now. We're still about halfway through the month of March, but we have a little bit more than half the volume. So towards the end of March, I do think that this volume is going to surpass last month's volume, which was a pretty big volume month. And so keep an eye on that. Now, as a shout out to our members, and if you're not yet a member, understand we offer a free, no strings attached 15-day trial. So you could plug in, just come to StickyTrades. I don't know if there's a scan code that could pop up
There you
there.
go.
There we go. We got a scan code right there. See that? Hit that scan code with your phone camera, and it'll bring you to the offer. And when I say no strings attached, it means at the end of 2 weeks, you don't have to call anybody to cancel. You know that game that people play that you could sign up, but good luck trying to cancel what you just signed up for. We don't do that, and there's no sales pressure. So at the end of 2 weeks, this offer, the membership, just expires, and then it's totally up to you if you want to come back. But we have a lot of very happy members. And today, the shout out to the members is that we put on a protective diagonal calendar put spread. I can't give you all the details because obviously the members get that, but it's a protective put spread that's going to help in the event that we do get this downturn that I'm anticipating. It'll help our members actually make money on the way down. So if you're not positioned for at least a correction, and I'll leave it at that, I'm being conservative, with at least a correction, then you got to just buckle up and absorb whatever loss you might be faced with. And if you could stomach that, that's great. But our goal is to minimize the losses. Nod said at the very beginning, to be able to put protective stops, maybe collar your position on the way down, or maybe put some protective puts or put some negative delta spreads on if you want to learn about options. But looking at SPY, and I'll end with this after the VIX. The SPY is also pivoting. So I think, again, we could see a duplication of what we saw in 2021, which, again, this is a monthly chart. So we could be in for a ride lower for what I believe could be the rest of this year. Right. Now, we're making money, folks, even in the silver market on a day like today. The USAR, which I mentioned, I'm just going to throw this out there as a more or less a freebie, right? A freebie analysis. USAR is a position that we've been talking about. Now, this stock was up over 3%. Let me get rid of these lines. It was up over 3% when the Dow was down about 300 points. You see, so knowing how to position in some of these mining stocks and some of the metal stocks is a good idea. And I think, Nod, as a protective play, I think you're going to have a lot of investors moving into that sector as more a safe haven, right? If you don't know what that means, it means moving your money into the stronger sectors, so that if the market corrects, you're not going to get hurt as badly had you held on to S&P stocks. Now, one last thing, Vix, Nod, because I want to talk about the VIX.
I've been called worse.
I call you Vix. I have a cousin Vic. All right. Anyway, this one blew through my upside target. See that dotted line? It blew through the upside target, pulled back. But now, look at that. The VIX has a higher low, higher high. So the VIX right now, and you'll find out more tomorrow in the weekly market report, that VIX is primed for a continued move higher after the pivot has formed today. So a bullish VIX is bearish for the S&P. To keep that in mind. And I know we got a lot of tickers coming in here, but Nod, I also want to talk about what I ran, because that's the elephant in the room. And
yeah, so AJ, let's do that. So regardless of what everyone thinks, if whether you're trading oil directly or you have any exposure to the market, oil impacts you, and trading oil is hard. So let me pull up this chart. This is just some of the difficult volatility that people face. I know it's a little bit small, but there's a red line in there where the Transportation Secretary Chris Wright said that the Navy ship escorted ships through the Straits of Hormuz. So oil dropped 8.3%. Then that social media post was deleted with the blue line. So it popped 5.49%. And then that post was put back up. So it popped another 9.5%. So that's just in one day. So AJ, volatility like this shakes up the unprepared and can hurt people on both sides. So this is another oil chart just to drive my point home. AJ, I know you prefer to not even look at markets or consider trading before 11 a.m., which is really difficult for a lot of people to wrap their head around. But using this example, please go over your rather unique and pretty successful approach to the market.
Well, I do trade in the pre-market once in a rare while, and I don't make a habit of it. But if I'm doing that, I usually do it with my cell phone because it's easy, number one, and I use Schwab. The platform there is very easy to use. But I normally don't turn on my charts, my overall, charts I use for analysis until around 11. And a lot of our members know that. So if they try to get in touch with me before 11, I'm like, hold on, let's not get too crazy and try to trade the opening. Because if you try to trade the opening, you have to understand that it's the morning hours that are loaded up with all this news. So you're most likely going to see knee-jerk reactions to the news, like what we saw
look
today.
At that chart. Look at that. People got chewed up on both sides.
Oh yeah, like what you said today with the oil, the reserves being used in an emergency situation. People are going to react. They go, oh well, the reserves. All right, that means they're flooding the market with oil. So oil prices are going to go down. Well, maybe for a couple of minutes,
right?
Right. But then what happens is then you got news that comes out from Donald Trump that the war is near an end. Well, let me give you my thoughts on this. You have to pay attention, whether you like the guy or not. You have to pay attention to what Trump is saying, because when he opens up his mouth, whether he's on Air Force One or at a press briefing or whatever it may be, his words move trillions, trillions of dollars around the world. Right. And so I don't care if you have Trump as at the top of your hate list. He's going to affect your portfolio if you're not careful. Now, here's again, my thought is he's saying that we're nearing an end to this conflict.
Right.
Okay. How many of you, raise your hand, how many of you have read The Art of War by Sun Tzu? Anyone? Let me see. We have any thumbs going up here? I don't know. But you have to, if you're in a conflict, you have to show strength when you're weak, and you have to do the opposite when you're strong. If you're coming out strong, you have to more or less pose as your weakness. You're showing your weakness. You study history, go back to World War II, and remember Tokyo Rose. She was throwing propaganda out to our troops to try to discourage them that we were losing the war when we weren't. I mean, there you go. So a lot of what you're hearing from the White House, I believe, is propaganda to throw the regime off kilter. I mean, one of the comments that came out today is he said that we're what did he say? Now we're running out. It's not funny, but we're running out of targets to hit. I think he said, well,
he said there's nothing left for us to attack.
That actually is, in fact, very true. And this is something I know a lot about because I was part of that rescue mission in Iran in the Indian Ocean way back when terrorism first started. So I know how that element is going to affect us. But going back, bringing that all back to the market, I believe that the fallout from what we're seeing here with the conflict with Iran in tandem with what Israel is doing, I think that there are going to, now this is my opinion now,
right?
I believe that there are sleeper cells here. I can almost guarantee you that. I don't have the naval intelligence that I used to have. There's a plaque back here somewhere behind me. I was involved with the CB Combat Warfare program where I developed that for the Navy. Part of that was uncovering training camps in Florida, and we found some right outside of Ocala, believe it or not. And this is long before our conflict here, obviously. But you have to understand they are here. Do I think they're going to go into mass sporting events and start blowing things up? No, I do not. I believe that their attacks will be very strategic in an effort to hit us financially and economically. So they might, and again, I'm speculating here, but they might hit maybe a power grid here or there, try to knock out the internet, try to get things moving in that regard to scare the investors and maybe even spook a crash in the market. Now, that would obviously be devastating, not just to investors, but to the banks involved, because the banks are highly leveraged right now.
Right.
And you throw out a couple of big name banks, and now all of a sudden they're going belly up, like what we saw in the past with Bear Stearns. That's not out of the realm of possibilities here.
Right.
And so you got to be really careful with your money, because we're not trying to make money from the attacks or anything that's happened militarily, but you have to position yourself ahead of the threat in order to protect yourself and your assets, so that when the fallout occurs and we finally find a bottom, which we will ultimately, you're going to be loaded with cash, ready to strike into the next new buy opportunity. So these are opportunities waiting to happen, but you got to be patient with that. And not, I think we made it to number one spot again on
Yeah.
X.
Well, AJ,
Yeah, look at that. Yeah, we're right at the top. We're crushing Alex Jones here. Alex Jones network is hurting right now. Folks, thank you so much. You're the ones that are throwing us up there at the top of the list. Thank you so much for that. Really
so let's keep feeding them. So AJ, everything you've talked about, we talk about volatility. I know you don't like to trade the VIX, but I've got something up here on my screen right now. So with regards to VIX positioning, VIX options dealer, we're in the zero percentile for gamma positioning, deeply short gamma. We don't need to go down that rabbit hole, but moves like this can become messy. So AJ, with data like this, what kind of market condition feedback can you give people? So let's dovetail on top of what you've already talked about with regards to position sizing and timing. I mean, volatility is here. We see it in the VIX. What else can you talk about? You've covered the majors, but I mean, with regards to maybe some of your personal trading and this type of volatile environment, right, what are you doing?
Well, outside of the VIX, I've traded the VXM before, I've traded VXX. I've used options to do those things. But for the average person, if you're not following the technical charts like a trader will or would, then you could get hurt, especially on the leveraged ETFs.
Right.
But if you're just starting out, you want to take advantage of a down market, I would say take a look at RWM. I have that up here right now. RWM is the short Russell 2000.
Right.
Now, I'm not as bearish on the Russell as I am on the SPX and on the Qs, but you could obviously see here something is going on with the Russell. Now, so in other words, to clarify this is a bearish ETF for the Russell. So when the Russell goes down, the Russell 2000, that is, this one will go up. Now it's trading for around $16 right now. But the good news is for the option traders out there, you can get in on very inexpensive options, especially if you're a spread trader. Now, this is known as a rounding bottom here. Now again, this is a bullish pattern that John Murphy years ago on CNBC used to talk about. He would say the longer the base, the higher in space. Right. You could also look at this as a possible inverted head and shoulders pattern, where here's your shoulder. It's more or less a complex. You got two shoulders on the left, the head, and you got two shoulders on the right. That's a complex head and shoulders. And we're now breaking out above the neckline. So while we could see a little bit of a pullback here, I think any kind of a bounce off of that neckline could wind up making you some good money on this one, percentage-wise, in a very inexpensive ETF that you could trade just like any stock. All right. Now, speaking of stocks, I'm looking at that clock. Holy mackerel.
Yeah, I was getting ready to pounce. I mean, let's do this. So last week, Nick was our first person. And so if and when SIVR hits its target, Nick, make sure you send me a message at ajmembers@stickytrades.com, and I'll take care of you. Our first ticker request in today was from our longtime viewer, TAFE, TT. So AJ, in a nutshell, he's talked about how some of these names have gotten nuts, in particular, SanDisk. So AJ, SanDisk is now up, SNDK up 35% just from Sunday's futures open. What are you feeling with regards to SanDisk as we speak right now?
Well, here we go again. Some of our VIPs have a beautiful position in this. I'll do a quick shout out to Fred. This one has done an excellent job. I would say about 90% of the targets that we put on this one have hit. 90%. I think this is the only one down here that has not hit. But look at how beautiful this one's been oscillating. Now, right now, it hit the target as of today. I had a target last week on that one at 647.69. I go right to the penny, by the way, folks. If that doesn't hit to the penny, it doesn't count on our record keeping. And so there you go. We closed right near the high. I think this one could go a little bit higher, but and who is this one? I'm going to put a downside target, and then we'll give.
This is for TAFE, TP, longtime viewer.
TP. All right. So I'm going to do a two-parter on this one, but it's the downside target that I would focus on this one. So I'm going to go upside on this one. It's 660. I'm going to round that exactly as 668. Get rid of those pennies. So I think we got a little bit more upside to 668. So you got about $13, maybe $12.50 still left on the upside. Then I think it's going to take a hard turn down to 612. Now, the downside target is what I'm focusing on, because look at the volume dropping on the way up. Yeah. You see that? That's a leading indicator, folks. A lot of people don't talk about volume as such, but it is a leading indicator. So it's hitting resistance up here as well. So I'm going to say downside target is 612. If it hits that target, then come on over, give us your address. We'll send out that swag. I think this week, Anthony, tell me, what do you got? You got a backpack or something like that we could give out? A Sticky Trade backpack?
Yeah, it's a cool looking backpack.
Yeah, Anthony's in the production room there. He's very busy. I'm asking him questions. He's probably going, why are you asking me questions? All right, I'll just give out this swag. But yeah, let's keep an eye on this one. SNDK downside target is 612. And then we'll give some swag up. Let's go back to Nick real quick, because he looked at SILR, I think you said.
SIVR, please.
Oh, SIVR. And look at this. Yesterday came within pennies of hitting that, and it pulled back. Now, I'm still going to keep, Nick, just so as an FYI, I'm still keeping that upside target at 87.41 on that. So you still got about $6.50 of upside, and that's a beautiful hammer candle right there on lower volume. So when the volume is dropping on the way down and hits that moving average, you're most likely going to see a bounce. Real quick, Nod, while we're looking at silver, I'll let our viewers know PSLV is the one I trade. Yep. And this morning I bought more. I didn't put it out on X because it was a pre-market trade. I bought this one on the opening. Hey, I'll show you exactly where I bought it. In the pre-market, right before the opening, I saw this sell-off. This is a minute-by-minute chart. I saw it bottom out with that hammer candle. And then what did I do? I waited a couple of minutes and I bought it as it was crossing over the 20-period moving average. I bought it $27.99 exactly. I bought more. So I'm cost averaging down on PSLV. And I think this is another one for the traders out there. It's very inexpensive, only trading around $28 right now. I think this one is in a beautiful triangle pattern, symmetrical triangle. It looks like it wants to break out of that triangle. So I have a lot of optimism in this one. And I'm putting my money where my mouth is here, folks.
You always do.
I have a pretty large position in this one. I'm looking forward to the upside on that as well. All right, what else you got, Nod?
All right, Sherilyn would like us to do CAVA, CAVA, please.
CAVA. All right, here's one. Oh, look at that. That's very interesting. On a big down day in the market, this one squeaked out almost a 0.5% to the upside. That looks like a hammer. Now, this is a very tough one because it's caught between the gap here and a possible triangle here as well. I'm going to go with the pattern. I probably wouldn't be touching this one unless until you get a breakout of these highs. But that's a bullish harami coupled with a hammer. So I'll put a target out on this one, but it's going to be a very slight upside target because, like I said, I think the general markets are going to go down and it could bring this one down with it. So you got about almost $2 to the upside on that one. So we're talking maybe 1.5% more to go on the upside. Then I think you could see a pullback to fill that gap. Gaps fill 80% of the time, folks. Take note of that, you brand new viewers. 80% of the time, gaps fill. This is a gap, which means there's an 8% chance it's going to pull back to fill the gap and then maybe bounce after the gap fill. By the way, we do this every Wednesday from 6 to 7 live, where we'll take 50 stocks just like I'm doing now. So this will carry on over into the evening session. I'll take 50 stocks and analyze them with targets in that 1 hour period. So if you want to get that free membership, come on over. You still got time to chime in to that one. Now we got a minute and a half left, Nod. We end exactly on time. So what's the last one?
We do. Let's get JVM in for Marvel. MRVL for JVM. Please.
MRVL, Marvell Technology. Here we go. Sell it. Boom. Bearish engulfing. Gap below the market. I'll put the target out on this one. This would be a star favorite, in my opinion. Not maybe in the last 30 seconds. Go look at the 7-point trading algorithm and tell me if you see nothing but sell signals on that. But we got a bearish engulfing. We've got a drop in volume on the way up, gap below the market. We got a wide divergence from that moving average, hinge and almost a pivot on the stochastic, almost a sell signal on the CCI. So that sell signal is prompting me to give me a downside target there of
6 bearish, no bullish.
Oh, 6 bearish. We have an algorithm, by the way, that's based on my 7-point trading checklist. So that's telling me sell it all the way. That's the chart telling me, not me telling you. 86.77 is the downside target on Marvell. You option traders must be salivating because they have really cheap options out here. If I were trading that on the options, I'm not though, but if I were, I'd be buying maybe the $75 puts here for around $4. You put up $400 per option, and you could probably make some money on that one on the way down. So that is it. Holy mackerel nut. I'm almost out of breath talking about these charts, but we're having a great time. And again, look at us right at the top on X. You helped us blow the numbers away. Thank you so much. Make sure you hit that like button. And if you go back to the recording and you want to leave some comments or questions, I answer almost every single question that comes up on YouTube. It takes a lot of time, but we're absolutely happy to do that. So thanks for joining us. Nod, thank you so much for your live feed, and we'll talk to you next time. Take care, folks. Good night.